Most high yield ETFs pay big dividends, but there's a catch. They slowly eat away at your NAV. Today, I'm going to show you the top monthly dividend ETFs that deliver strong income and protect your capital with no NAV erosion. If you're chasing high dividends but don't want to see your investment shrink, this is the video for you. Hey everyone, welcome back to the channel. I'm Doug, the retirement guy with the monthly ETFs. I want to help you build a smarter portfolio with dividend ETFs, passive income, and retirement strategies. If you want your money working harder for you with every single month, then hit that button and hit that subscribe. You don't want to miss any updates that we put out there. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. This video is for educational purposes only. To consider for financial investment advice, always contact a professional advisor. Why NAV erosion matters so much? Here's the problem. Many high-yield monthly ETFs look great on the surface. They pay double-digit dividends, sometimes 12, 15, even 20%. But if those dividends are funded by return of capital or poor strategies, your NAV erosions over time. And that means while you're collecting checks, your principal investment is shrinking, and that's not suitable. Now, I know this is a weekly one, but I put it up there because originally it started off as a monthly at ULTY, paying huge 80% dividend yields, and we all love that money. But ULTY has also gone from $9 down to $5. And guess what? You don't get 80%, you get a heck of a lot less. And this is why we want to try to avoid this. So what makes a strong monthly ETF? Well, a strong ETF for monthly income needs really two things. One, it needs that high consistent dividend that keeps the cash flowing. Two, you need that capital preservation so the NAV stays intact over a long run. The sweet spot is finding an ETF that is balanced, yield with sustainability. And we feel that we've done that. The top ETFs that made the list must have: one, high dividend, over 15%, and pay monthly. So we're not looking at those weeklies, we're not looking at annuals, semi-annuals, we're looking at everything that's paying out monthly that's over 15%. Then we said you have to have the capital preservation, no NAV erosion with your year to date. Okay, there's been a lot of things that's happened this year. We had the tariffs that dropped off, we had the bad numbers coming in for unemployment and so on. So you have to run through all of those and make sure that you have been able to keep my capital in line to make the list. You also have to have 1 year or more track history. So we're not going to pick up on a brand new fund that's doing great out of the box. I want something that's been there at least a year to give me some, long-term history that we can look into. When we did that, that ended up with over 466 total ETF funds that we had to evaluate and run through our numbers and test things out to find you what we call our top 6. Let's take a look at what those are today. Number 1 is GDXY. I was shocked when I got a yield max as a number 1, but this one is the Gold Miners Option Income Strategy. Now these guys use synthetic cover calls over the VanEck Gold Miners ETF. Now they're not investing in gold, they're not investing in any type of companies, they're all investing right into the VanEck ETF that does exactly that. They invest in those other categories. But what they did here is they want to go after the guys who are not, they want the miners. They want the people who are producing the gold, not the people holding the gold, the ones who are finding it in the ground. Those are the ones that they're working with. Now this fund came out in May 20th of 2024. And when I looked at these numbers, we were actually very shocked at how well this thing has been performing. Right now, distributions are 42.99%. I will tell you straight out, I did not expect to see something in the 40% range when we started this project. And then you add in 13.81% in total growth over the year to date. That gives that thing a whopping 56.80 total return year to date so far. When we look at the bar chart for the growth, you can see year to date 13.81%. It's a $16.40 fund. And we've had some highs, we've had some lows, but overall, you have a nice mixed balance across the board in those numbers. So I'm very pleased with what I'm seeing on the chart so far. When we take a look at the dividends, yep, it's definitely a covered call type application, or because you see it as they sell more volatility in the marketplace, probably as gold goes up or down, you're seeing it in this market right here. And the funny part is this thing comes in with an average of 60 cents per month. Even with all these lines bouncing up and down in every which way, and last month it paid 65 cents a share. The average is a solid 60 cents. This is a very, very solid fund. We get into our next fund, and that's going to be Maxi. This is simplified Bitcoin strategy plus income. Now, this one came out September 29th of 2022. So it's been out there definitely well over a year. We're really close to 3 years on this fund already. Now, this one is really into the whole Bitcoin strategy. It holds long Bitcoin futures, short-term debt instruments. So their whole thing is working with that long-term Bitcoin futures. They came in at 30.26% distribution rate, a 13.37 growth on the fund, for a total of 43.63%. Very solid part numbers. We look at the charts again, and we see this doing an amazing job. Even with the drop-off that we had in April, this thing rallied back even more aggressively than it did before, and it's been holding it at a $30 price share. Solid core. We look at the dividends, and we're actually seeing a very steady, solid dividend across the board. This one pays an average of 76 cents per month. Even though last month and the last 2 months it's actually paid $1. We just sit this and say, man, this thing is just really cruising right along at a fair, smooth price. Fund number 3, QYLG, Global X NASDAQ 100 covered call growth. Now, there's a ton of covered call programs out there. Some of them have switched over to monthly or weekly because they couldn't handle the monthly program. Global X, I will be shocked at how well they actually do in their funds doing it over the monthly period. This is an exchange program. This came out in 2020, so we got a little over 5 years already into this fund. And they are writing the NASDAQ 100 half buy right calls. So they're doing this, and the index holds NASDAQ 100 stocks and sells calls option on half the value of these stocks. Now I'm going to jump in here real quick and say, you know who else does this? Rex shares. But Global X is doing a better job than anyone else I've seen so far, that they are able to do the two things. One is they're using half the fund to do their covered calls to generate income, while the other half is there to grow. So you really don't have as much capping space on the fund. So this thing has a chance to grow and create income. So we take a look at this one, 24.59% distribution, very solid in this category. A 3.18% growth of the fund, not what I was expecting. So a total of 27.77%, but still fits in at number 3. When we take a look at this, again, the coming out of the April 2nd, it's come out and it's recovered fairly well right back to where we expected it to be, $28.97 fund. So this is kind of one of these things is, hey guys, even if we have a major issue come up like we did on April 2nd, this thing's going to come out of it. You're going to hold tight. You're not going to lose the money that you see in other funds. Now, this is the one I love the best. Take a look at this. This thing is a flat line. Now, if it was anything else, we'd say it's dead, but it's not. This thing is flat line, paying 13.6 cents each and every month, pay in, pay out. Now, why do we have almost a $5 spike in January, which is actually December? Because what Global X does on every one of their funds, they go in and they pay you a steady income. Like I said, that 13.6 cents, which is an average of 17 cents across the board. We did take out that $5 one for one reason, because what they do at the end of the year, they tally everything up and they will pay out one big giant dividend. Okay. It is probably the only thing that I would say that they do wrong is I would like to see that money each and every month, but we have to wait till the end of the year to get that big dividend check as they clear all their books and straighten everything out. So it's a very strong piece, but everyone will say the downside to it is I would like to have that money more monthly than waiting all the way until December to get your big giant kick out. And they've done it over and over again. They've done it here in January. They've done it back in December of 22. Not as much in 23, but they definitely did it in the 24, and we expect it again in 25. Our fourth fund, well, this one's going to be the Global X Dow 30 covered call growth. Very similar to what we just talked about. This one came out in July 25th of 2023. Now, what they do in this one, again, is they're using 50% of the value for underlying portfolio. So they are trying to do the same thing of do some buy right indexing, doing some calls, doing some different things with the money to generate income. 16.41. They're only using the top 30 on the Dow. So 3.39% year-to-date fund and a total return of 19.80 total return. We look at their charts, everything looks identical what we've been seeing, dropping off in April, recovering, coming all the way back with a $28.97 fund currently. Their dividend, again, guys, Global X, what they do, here it is, a 14-cent dividend. Their average is about 9 cents, so they brought that up a little bit, but they do the big payouts in December. Our fifth fund, Global X again, doing it now in the Russell 2000. This one came out in 2022. I love the way Global X does this stuff. I'm very pleased with what their performance is, and that's why they made the top 5. It's been very interesting. 22.97% distribution rate. Now, the growth on this one I was disappointed with, but I had to do some research and find out that the Russell 2000 has not had a great year either. It's been struggling trying to get growth out of them as well. And you can go back, look at your charts and say, yeah, Russell's had a good increase, but they're only 50% of the fund is being used for that side of it for growth. So it's really giving you the income. Hopefully we'll get some growth out of it. So 23.28%, same exact picture, dropped in April, came all the way back roaring, 22.53. So not 100% recovery that I would love to see, but they're definitely coming back to where it should be. And that's why. No NAV erosion on these guys. They've recovered. And again, dividend chart, paying 13 cents average per month with the big spike in December. Our final one here is going to be NFLP, and that's the curve yield premium strategy from Netflix. Where does this one come differently? Well, they're doing the synthetic covered call strategy, and they're doing basically some short-term fixed income instruments, which basically are bonds and government issued bonds and pieces of that. What basically they're doing it with the Netflix stock that they're trying to cap as much as they can of income, and then it's capped on the gains. So 22.49% distribution rate, a 7.28% growth of the fund. Very impressive with that one for a 29.77 total. We look at it, and this thing is just following what Netflix is doing. Netflix has a good ride. They announce big subscribers, things climb up, dollars are looking good. They invest money into new shows. It comes down a little bit, dialing this thing in. 36.77 is the share price of their fund, holding it all the way through the year. Take a look at their dividends. Dividends, very solid across the board. Again, 69 cents per month. Even though the last couple of months has been 55, they have the big jump in that December market, they have it in January market, and then they slowly been coming down. And if you go back and look at our charts, yep, you see the same thing. They've had huge volatility in the fund. That's what generates the income. As long as Netflix continues, it has volatility, you see big dividends pay out. So guys, here's the results. We put all this into our computer system, said, look, if we had $500,000 and we invested equally across all the funds, how would this come out? And we like to have diversification. We don't want to be all in gold. We don't want to be all in Bitcoin. So you can see that we have a nice coverage, again, across the board. We have one fund with the Netflix, that's all it's looking at is Netflix. Next, we do the Russell 2000. We do the Dow 30. We do the NASDAQ 100. The only thing that's really missing on here would be an S&P 500 fund. So we have it across the board, very well mixed of funds on all six, giving you high dividends with no NAV erosion, great growth. $500,000 invested in each one would put $83,333 in each and every one of the funds. And here's what you would have generated: a 25.15 distribution rate paying you out every month. The growth of the fund was equal out to be 7.21% growth across the board, for a total return of 32.36 total return. That's amazing with only 6 funds. So that means each year you would be gathering up $125,725 per year in dividend income only. And because you're not losing anything to NAV, that is your money. Take it and run. The growth onto it, you're looking at $36,025 per year growth. Again, this is if everything stayed the same. As we said before, past performance does not guarantee future results, but the dividends have shown to hold, and the growth has shown each and every year to have equal amounts of growth. So I'm comfortable with showing you these numbers and telling you that your growth of your fund would actually go up 36% or 7.21 percentage points, $36,000 a year, but you can sit and take that 125 almost literally to the bank with $500,000. So what would you do with $500,000 earning $125,000? I can tell you what I would be doing, and that is I'd be retiring happy. I'd be on the beach in my lawn chair, relaxing, enjoying life, being retired. That's what I would do with $500,000 in the bank and earning $125,000. I question, what would you do? How many of these funds do you guys own? Love to hear it. Put it down in the comments. If you guys like what we're doing, click that like button. And so many of you have started hitting that subscribe button, and we appreciate it. We are trying to build a second channel for you guys because this is all about monthly ETFs. Guys, I'm Doug. I'm the retirement guy with the monthly ETFs. Thanks for watching, and we'll see you next time.